Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a pullback towards the 99.5 naked VPOC and high volume node, where responsive buyers were still active. Bigger picture, the buy side continues to be dominant and in control, but our short-term bias is going to be neutral because we do need to see continued broad market strength and upside momentum in order to continue printing higher prices. So we know that the buy side is dominant in control. We know that the focus is still going to be more on the long side, but at the same time, the reward to risk is questionable at these higher prices, and we know that in order for the longs to work from these higher prices, we need to see continued upside momentum. So if the market is lacking momentum, where let's say the tick is holding below zero or it's just very mediocre, then it's going to be a very questionable trade to be initiating from these higher prices. And in that case, it would be better to just stay out of the market and wait for ES to provide a good reward to risk opportunity from relatively good trade location. So heading into the open on the upside, we have short-term resistance at 2207 to 08.5. Beyond that, we have Friday's high and Friday's closing price at 11 quarter to 1175. And after 1175, there is no hard reference level and there is no hard resistance. So I have a zone at 15.5 to 17.5 given the range potential of the day, but just keep in mind that beyond 1175 there is no hard resistance, and it would simply be a matter of where the range gets exhausted and ES kind of runs out of steam. On the downside, the first area of support is 97.5 to 2200. If the buyers are going to continue to be quite dominant and the market is indeed very strong, then we should hold above 97.5 to 2200. A break below that area would bring the 90 quarter to 92 quarter zone into play, and given the larger time frame bullish bias, responsive buyers can still be active and defend the 90 quarter to 92 quarter, and that's pretty much the theme at every zone on the way down. So 83.5 to 86 and the zones below are all areas where buyers can step back in because of that larger time frame bullish bias. So the main idea heading into the day is still going to be on the long side. We know that we can get edge on long setups as long as we're securing good trade location. The question is whether it's worthwhile to initiate longs at higher prices. And that's really going to depend on the real-time situation and how the underlying momentum is shaping up, how the other markets are holding up. Those are things we'll have to determine in real time. If you're in doubt, if things are unclear, then again, it's going to be better to sit back and wait for a good opportunity. And if one doesn't present itself, then it's better to have no trades than to take mediocre trades or trades that you're really not going to see through, and trades that don't really have high reward to risk. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control, and we'll take it from there.